We're at the forefront of a true renaissance in this space, and investors are going to do very well if they stay on top of the information. So let's get right into it. So first of all, the energy crisis is in full swing. The oil supply crunch, the fossil fuel supply crunch is just getting worse. The Biden administration tried to release a bunch of oil reserves to diminish the effect of this supply crunch, thinking that releasing the reserves from the ground are going to somehow allow the supply to meet the demand. But we have this report confirming that the energy crisis is in full swing. So you have Goldman Sachs says global oil reserves release a drop in the ocean. So the whole narrative about how there's a coordinated effort between the biggest countries in the world to release oil reserves to solve this energy crisis, of which nuclear energy is going to be the primary beneficiary. You have Goldman Sachs saying that that coordinated effort, which is covered largely in the news and expected to somehow alleviate this situation, was a drop in the ocean and insignificant. So a coordinated release from government oil reserves led by the United States may add about 70 million to 80 million barrels of crude supply, smaller than the more than 100 million barrels the market has been pricing in. So it's smaller than expected. On our pricing model, such a release would be worth less than $2 per barrel, significantly less than the $8 billion per barrel sell-off that occurred since late October. So I just wanted to point out the macro landscape and how uranium, which is the primary beneficiary of an oil crunch, of a supply crisis on the fossil fuel side, is just going to become more and more and more of a bullish narrative as people desperately transition away from fossil fuels and go to the only clean baseload power source, which is considered green energy, nuclear power. But let's go into the activity of the week. So you have North Shore Global Uranium Mining ETF, which is a good proxy for uranium stocks in the industry overall, down 8% on the week. And so that is, we know, primarily related to the new variant strain of the disease, which is causing this pandemic. And this is completely fear-driven and obviously won't be sustainable, especially because we had a collapse in the oil price of $10, which is just going to cause the supply crunch to get even worse. And people are going to need to move towards nuclear power. So this is an absolute gift for investors. If you look at the one-year chart, it does look like there's more room to kind of roll over a little bit. But as we've been covering on this show, this bull market is just getting started, and there's too much macroeconomic tailwinds to bring this sector so much higher than it already is. So the lower it goes, the better the buying opportunity. And as we've also covered on the show, true long life-changing bull markets are incredibly boring. It's not just a quick spike up in a few months. No, it takes months, if not years, to fully play out. And investors are rewarded for sticking it out through the pain and holding. So what are some of the new bullish developments in the nuclear energy space? Well, last week we talked about how Bill Gates and Warren Buffett are investing in nuclear power in Seattle. Well, here you have the world's richest and one of the most influential men in the entire world helping build a $170 million experimental nuclear reactor in Idaho. So here's just another major investment in the nuclear power space. This man is extremely bullish on uranium. He sees the vision, he sees the long-term future. And you generally want to take note when people like this are putting money where their mouth is. He's clearly very excited about it. Bill Gates' TerraPower is helping to build another nuclear reactor, this time in Idaho. The Department of Energy is funding 80% of the $170 million project. This is extremely exciting, and why the recent dip is an incredible opportunity, and any more dips, I might add, to get into this space early. When you have the Department of Energy and Bill Gates, two of the most powerful forces in the entire world, bullish on uranium. Next, you have this incredible headline: Bitcoin mining power crunch. Kazakhstan looks towards nuclear solution. So the country saw a great influx of Bitcoin miners this year. And that's because, they were kicked out of China, but it might have to sacrifice the immense tax revenue from Bitcoin miners if power grid issues are not resolved. So the problem here is that Bitcoin is insanely energy intensive. And it's also a revolutionary asset that is changing the world. So it's not going anywhere, right? And so as the demand to mine this asset increases, countries are going to have to get creative. And we know there's going to be a supply crunch in fossil fuels. We know that it's taboo to invest in fossil fuels. So the only possible solution, they can say it's going to be renewables all day, but the only possible solution is going to be to turn to nuclear energy to mine this resource, which is going to be mined for the next few decades. And the energy use is only going to increase. Kazakhstan's Ministry of Energy has attributed the 8% increase in domestic electricity consumption through 2021 to Bitcoin miners. So that just speaks to how incredibly energy intensive this is. And this isn't just in Kazakhstan, by the way. It's all over the world. It's in Texas. It's in many, many, many countries. It's a major, major use of power that people don't fully realize at this stage. The substantial increase in demand has led to a deficit in the domestic power supply and contributed to unreliable electricity services. Again, speaking to how serious the energy usage of Bitcoin is. This is just one country, one microcosm. Also, let's talk about the economic impact of these Bitcoin miners. While Tokayev did not connect the proposal to Bitcoin mining power use, failing to keep miners in the country could jeopardize the estimated 1.5 billion in tax revenue. So, right, follow the money. They're going to want to keep this revenue. They're going to do everything they possibly can to keep that revenue. And here's the kicker, right? All roads lead to nuclear energy, which we're going to prove over the next few weeks. Looking into the future, we will have to make an unpopular decision about the construction of a nuclear power plant. So this article just proves again that all roads lead to nuclear, and that as cryptocurrency gains in popularity and becomes a much more bigger deal, like every other energy source, it's going to move towards nuclear. Let us not forget the biggest elephant in the room when it comes to uranium, or at least one of them, is the Sprott Physical Uranium Trust, which Sprott, along with Kazatomprom and along with Yellowcake PLC, are just pulling uranium pounds off the market at the most crucial time when the entire world is moving towards uranium. And so the more they pull off the market, the more incredibly bullish it is for the Sprott price. And so this is a major, major, major development. On November 23rd, the Sprott Physical Uranium Trust made an amended filing with the regulatory authority to seek approval to issue units worth up to a whopping $3.5 billion during the 25-month period commencing on August 10th. On September 10th, the fund filed for an offering of only $1.3 billion worth of units. So in short, investor interest in the Sprott Fund is so high that it now wants to issue additional units worth almost $2.2 billion, so almost double what it's already done. So think about the major impact that the Sprott Fund has had on the Sprott price of uranium, and imagine doubling that. That's what we're talking about here. This is massive news. But that's not all. In another big development, the world's largest uranium producing and marketing company, Kazatomprom, formally signed an agreement to invest in ANU Energy, a new physical uranium fund to be established in Kazakhstan. We've already talked about this, but they're moving further along, and it's extremely exciting to see this arms race between financial institutions trying to take as much supply off the market as possible. And so this is going to incentivize a massive rally in the price, and we know it's going to take many months for that supply to be issued on the market. So it's going to cause a supply crunch that we've already been seeing. And so when you see dips like you did this week on the fear of a new COVID variant, which is probably not going to be as serious as the original one, and we saw what an incredible buying opportunity the original COVID crisis caused, you realize that dips like this are opportunities. Anyway, thanks so much for listening. We're going to keep you posted with more and more of these exciting developments as the exponential curve in this bull run gets steeper and steeper and steeper. This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.